Hello, everyone. This is your co host, Tony Chang, and for this episode, we have prepared trading tools that will help you evaluate your buys and sells on your next project. Please sit back and enjoy listening to how we got started, and we hope that this podcast will be helpful to your research from the one and only the Crypto Scrubs podcast. Hello, everyone. Today is May 17, 2022, and you are listening to the Crypto Scrubs podcast.
It is episode 5, where we talk about even more trading experiences, share some advanced tips, indicators to help you prepare for the next bull run. And been an exciting week, right, Tony? Exciting week always, but this week was a once in a couple years event that happened.
Definitely. I remember saying to myself and to crypto community saying that everyone grab your popcorn because this is about to get real. And last week or so, we had Terra Luna UST get destroyed. And the Luna token itself got destroyed.
Yeah, what happened was the depegging. So UST, the currency stablecoin for Luna, is always supposed to be at $1, but it depegged, meaning it lost its dollar peg. It dropped below $1. Once it did that, it went on a death spiral. So hyperinflation happened within like a span of 24, 48 hours, where 300 million Luna became 6.6, 6.9 or 6.6 trillion Luna. So imagine like your money losing like 10,000%.
Yeah. In 2 days time.
In 2 days.
In 2 days time, we saw like an 80% drop and then eventually a 99% drop to a 100% drop. I don't know where the market cap is right now currently for Luna, but I do know that everyone that touched it on its way down took the end brunt of it and lost a lot of money on it. A friend of mine told me that they lost $10,000. He put it in while it's going down, and then he looked at his wallet like a couple days later, and it was $2. So
yeah, it's funny because there was multiple 99% crashes within like 3 days. Like $99 became $1, and then people were like, "Oh, okay, let's put it in." No, $1 became 1 cent, and then what kept on going to like 0.00000 6 zeros. 3.
yeah, that's crazy. It's definitely broke a lot of people's heart at that point. Definitely, in our last episode, we were like really complimenting Luna, saying that it's probably gonna survive this bear run. But damn, were we wrong about that?
Yeah, it was just like instant karma.
Yeah, I mean, maybe it's it.
We should go recommend another coin, and then that'll be the indicator of you to stay away from it.
Like also known as a caster curse, where you like pretty much say something good about someone or something that happens, and now it does the opposite, which is crazy for Luna,
yeah. So we're putting that behind us. It was a bad call, and the timing was bad too. Sounded good on paper, but I think me diving deeper into it, we realized that collateralizing something that isn't native with the currency that you're issuing is always a bad idea. So that's part of what happened with Luna.
Yeah, so let's talk about what happened with Luna actually, just like for 30 seconds. I wanna mention so what ended up happening was the UST peg that Terra Luna had depegged, and so they were forced to sell Luna tokens in order to pretty much compensate and try to bring that dollar peg back up. But this happened very quickly during the bear market while Bitcoin was also bleeding, and they also bought a lot of Bitcoins at the time to kind of be a backed UST to a dollar peg, which was probably the wrong choice at the time because everything's going down. Buying something that's more volatile that's going down is not going to really help. And eventually, Do Kwon, the owner of Terra Luna, became the poorest billionaire out there. He went negative billions Like I don't know what that does to him in terms of his financial credit, but I'm pretty sure that might, you know, string him from out of like being able to buy a home in the future. I don't know what's gonna happen to this guy. Like he's gonna owe people a lot of money, and he's down billions of dollars of investors' money.
Yeah, I don't know how it would work like in crypto because in traditional finance you can just declare bankruptcy, but I don't know if you, I don't know if I don't know if the government will back you if you lose like billions of dollars of Bitcoin. So, not sure what's going to happen there. But yeah, Do Kwon was like, I'm not sure how much he slept in this past week or two because it all happened so quickly, so unexpected. But some people say that you should have seen it coming because it wasn't really a scheme or anything. It was published, and this is exactly how Luna is designed to work. How Do Kwon said it would work, and everything played out like according to the book. But this death spiral, in the impact and kind of just the velocity of how it happened, was the key that no one
Yeah,
expected.
imagine being in his shoes. Like, how does he get sleep at night and be able to wake up the next day to do anything? Like, literally. How do you start another project? Like, how does he recover from this? One thing to note is that he did, after this event, they lost about $18 billion.
Yeah,
18 billion.
yeah, it's a lot of money
Oh
there.
my God.
I think Luna's market cap. Well, what's even crazier happened if you actually time Luna at the bottom, which is going to be pretty hard to do because lots of people did it and then lost 99% over and over again. But at the bottom, if you bought it, it would have been I think over 100 times, 200x gain if you were to bought it when they resumed the Terra
Yeah.
blockchain.
And so this was a top 10 project that just went down and under overnight. And at the same time, we do want to mention that they've decided to abandon UST, Terra Luna. They're
Yeah.
going to abandon the coin. They're also abandoning the Luna token, and they're creating like some kind of classic token called Loon C, which is like Ethereum Classic to Ethereum, which is going to be a little bit weird. It's going to split up the community and whatnot. He's doing everything he can to try to save the human capital that's involved with all the developers and whatnot. But in terms of the finance, everybody is negative.
Yeah, they're trying to repurpose the Luna blockchain space, so we'll see what's gonna happen. But don't fall into the trap of like, hey, I can buy like a trillion Luna right now because there's a lot of Luna out there. The market cap is still pretty high actually. It's at 2 billion right now, so always look at projects from a market cap perspective. Don't fall for that trap of like, oh, I can buy so many tokens at this like ridiculous cheap price because you're not buying much value in the
Yep,
end.
that's right. All right, let's kind of move on to some of our trading resources and strategies. I don't know where to really start from here other than maybe just mention a few things that we like to do.
Yeah, yeah, we're gonna Tony and I trade on a regular basis. Trading on a bear market right now is especially difficult, but when things are going good and there's a bull market, these indicators and strategies and have helped us a lot. So we're gonna go through. There's definitely a lot of indicators out there. We're gonna go through the ones that we fall back on and use over and over again, so you guys can take away from it as you will.
All right. So, one thing that we do have to mention is that a lot of this charting and trading comes with tradingview.com is what we use for one of the resources. Highly recommend using TradingView because it's free. At the moment, it's just a free website, whether you sign up or not. You can also get paid for extra premium, I don't know, activates, I guess, like alarms and stuff, whatnot, and having multiple screens or multiple charts in one screen is paid for TradingView. But for the most part, just to starting out, TradingView has majority of its platform is free.
Yeah, I personally use TradingView Premium just to have a couple more indicators. So just going straight into it, I think the indicators that I use are kind of MACD, which is the moving average convergence divergence indicator, VWAP, volume weighted average price, and also RSI. So kind of starting from RSI has a gauge of kind of how hot and how oversold and how overbought one a crypto is, or anything, stock, anything that you could chart. So usually has a scale of 0 to 100, and anything approaching 20 is considered oversold. Anything approaching 80 is considered overbought. So if you're trading a range or trying to time the market or trying to time your trade, this is a really indicator of kind of how oversold and overbought something is.
I definitely use the same indicators. I use a lot of the momentum indicators such as RSI, and I guess RSI is being the main one. I don't use MACD, but it's a very good one to check once in a while. I'd like to use moving averages in order to remove a lot of the volatility in price. It helps me kind of just picture which directional it's going. I use the 50 moving average, 50 days moving average, and 200, and see if they like cross. The golden cross and the death cross are just like long-term indicators of what's about to happen with the price action. That's one that I use, and there's one indicator that I use on TradingView right now. It's just called Supertrend. Supertrend has been back tested, and it's just been really helpful. It's been really great to use, but it's not always correct, obviously. But it's been very positive in terms of its strategy. So,
yeah, moving averages are something that's pretty widely used across a lot of different traders. So you're gonna hear like moving average, like 20-day, 50-day, like 100-day, all the way up to like 200-day even. So if you're looking at like longer term trends, a lot of people are gonna say like, oh, the price hit its moving 200-day moving average. That means it should bounce. So a lot that happens when like a lot of traders are looking at the same thing, and when traders are looking at the same thing, they tend to buy and sell at the same spots. So moving averages is definitely something that you should refer to, because that's what most people look at.
And most of the times we want to look at like for me, for example, when I use moving averages, I don't look at the smaller time frames like the 1 minute mark. I actually look at them from like the daily and above, or like 4 to 8 hours, because there is like less error in terms of these indicators sometimes at higher time frames. So they all work differently. Some indicators actually work better in lower time frames, like in the 5 minute mark or less. So that's something to look out for. It just depends on what strategy you're using, and seeing if you can back test it based on different time frames. So that's something to look out for.
Yeah, and if you're trying to invest long term into crypto, definitely look at like the really long term moving averages, like the 50-day and the 200-day, because if you're waiting for a price or trying to find a price to invest in long term or just to enter, once it hits one of those 50 or 200-day moving average targets, then that's probably the best time to buy. But again, what I'm doing is I'm not trying to time the market. I'm trying to buy just whenever money comes around. That usually is a pretty good, solid long-term strategy. But if you're trying to trade a portion of the portfolio, then moving average is definitely helpful.
Yeah, Galen just mentioned 3 different types of trading strategies. One is day trading, where you're mostly looking at like the minute marks, the early minute marks, just trading up and down based on tiny movements, trying to capitalize on that, which is actually controversial to a lot of amateurs, because if you don't have like automated trading, high frequency trading tools, you're actually going to lose more money than make any money. And so usually this is for high professional day traders who do this as a living. And that's one type of trading aspect. There's a swing trading where you're looking at like the daily mark, hour, like 4 hour and above, where you're just trading off of like big movements, and that movements that take maybe like a couple days to complete from bottom to top or top to bottom. And you can really never really time those as well. So you could technically lose a lot of money on this. It's all a percentage. And the best one, I think, in my opinion, especially during this bear market, is dollar cost averaging. Is whenever that paycheck is coming in, you just slowly buy as the market's going lower and lower, just to bring your buy average cost basis down. Um,
Right. So that's kind of using moving moving averages. Another one that I moving averages and kind of RSI, trying to gauge when to buy in. Another one that I use and kind of discovered just by looking on Twitter is called VWAP, VWAP, volume weighted average price, and that's basically it shows you a line of where a lot of the historical activity has happened, either through a lot of people buying at that price, or a lot of people kind of FOMOing into and kind of selling at the top. So, and it has like steps and kind of sections of where you should watch out for. And I found that prices always gravitate toward this line. And I think right now, if you zoom out at the chart, Bitcoin, that volume weighted average price for like the 200-day average is right at like 21,000, which is the target that a lot of people are getting that's been floated around a lot. That's the kind of the sailor margin call price also. So I wouldn't be surprised if Bitcoin's price falls that far. And that's how I found out through that indicator, the VWAP.
It's so funny. I actually think that Bitcoin is going to drop to 21,000, so I'm going to have to place a bid. I'm actually going to place half of my bid in like 19,000 and 21,000. I think it's going to hit 17 to 19. Just my opinion. Just based on like my previous experience, nothing like hard evidence or anything like that. So
right. Another one that's really popular, like the media, is called the Fear Greed Index. It's very simple. It's like a 0 to 100 scale of fear and greed. So the lower it is, there's a lot of extreme fear, a lot of panic, and when it's high, there's a lot of greed, a lot of just people buying and being overly optimistic. So right now, I think Fear Greed Index right now is in the 20s. It's been fluctuating around there. Got into the teens there one time, and when it gets like to the teens, that's like extreme fear. Probably like short term if you're trying to get in. That's a good spot where other people are selling really a lot. And I think reached that when like Luna was in its death spiral.
Yeah, we're right now.
It was like a market wide.
Right now, currently Bitcoin is at the extreme fear 12 out of the 100, I think, if 100 is the max.
All right.
It's pretty interesting. The next update's going to happen in 21 hours from now.
Yeah.
But yeah, extreme fear.
Yeah, it might stay there for a while because in a bear market, it's usually like 2030s. Oh, maybe, yeah, 2030s teens for a long time. So, but bear markets is the best time to accumulate, and you will get rewarded when the next bull run happens. So that's my idea. I'm not trying to play cute and try to time anything this time. Just accumulate because I really believe in this space.
Yeah, so I would like to also, on top of that, talk about the Bitcoin halving countdown. So there's actually a halving countdown website somewhere. If you just Google it, it'll come up. It's pretty much telling us when the countdown for the next bull run would pretty much happen. We have about 716 days. It's going to happen supposedly around April or May of 2024 of the halving event. So what that essentially just means is that we're going to have less rewards per block for Bitcoin, creating a constriction in supply, and continuous demand will skyrocket the price of Bitcoin. And so that's, I think, the best time to buy Bitcoin is during that year, so early of January of 2024 or within the last 6 months of 2023.
Yeah, I think again, like we've mentioned this before, Ethereum moving the proof of stake is going to be a really big deflationary event for Ethereum. Definitely had that on your radar as well. So like, there's like 2 huge events happening in the next 2 years. So don't lose sight of like kind of the bigger picture amidst all this quietness around crypto. So another indicator I want to kind of bring up is called another another indicator kind of revolved around trading ranges. Well, what we're in right now is in a bear market where like ranges are really important. It's not like going in a certain direction. I think we've gone down a lot, so I don't think we're gonna see these like sharp spikes down as frequently. We may see some of them, but I think we're in a range bound market. So one of the indicators I use is called a Bollinger Band. Basically shows you kind of shows you a distinct range. So when price reaches the top of the band, that means kind of overbought. And then when a price reaches the lower range of the band or channel, it's going to be when it's oversold. So that's another indicator I use.
Yeah. I also use something called Woobull. Wooly Woo is the guy.
What?
Woobull is Woobull. He made a lot of like these new indicators at the time back in 2017 when people didn't really know how to measure when Bitcoin is like a buy or a sell. Nobody knew how to take a look at Bitcoin because it was such a new asset and technology itself. So therefore, he's created something called like the Bitcoin PE ratio, the MVT ratio, and how Bitcoin. He also did 8 years of historical data against Bitcoin, real estate, stocks, and bonds to see what the risk-adjusted returns were compared to from Bitcoin to each other, and it shows clearly in the chart. This is a great tool when you want to prove to other people why Bitcoin is actually a better buy, regardless of how volatile it is because the Sharpe ratio is much higher than any other assets out there right now currently over stocks and real estate.
Yeah. So we went through a lot of like indicators that you could use as like charting tools with. We mentioned like RSI, Bollinger Bands, kind of VWAP, MACD, moving averages, Woobull. Those are kind of things that you could do and actually draw out and add on TradingView or any other charting tool. Another aspect of trading or kind of advanced trading tactics, if you will, is being aware of on-chain metrics. What on-chain metrics is an attempt at tracking the flow of crypto across exchanges, wallets, and kind of sources and destinations. And what's happening right now, and this is pretty consistent with bear and bull markets, is a decrease of Bitcoin on exchanges. So people are kind of either buying Bitcoin through the exchange, moving it off the exchange, and storing it for cold storage. So people are accumulating Bitcoin right now. So even though the price of Bitcoin is low, the amount of Bitcoin on exchanges is actually at an on-time low and also going down. So we're not seeing many people like kind of selling or trading their Bitcoin right now.
Yeah, that's very true. I would definitely say on-chain. I didn't really want to mention on-chain myself because it was a little bit more advanced, but there's a lot of information based on how Bitcoin is being used, whether it's transactional or, just, I guess, the growth in hash rates or whatnot. So definitely there's more information out there for a lot of the data geeks regarding Bitcoin and how it's being used currently today. Definitely a bigger adoption than what it was previously 5 years ago, even though the price has dropped significantly, around like 50%. I still think we got more to go going down.
Yeah, well, one thing I do want to add was on-chain metrics is really important tool to spot kind of tops. So during the most recent like Bitcoin top around like 69K and even like around 55K was a lot of times the order book drying out on exchanges, and that means like when you place an order, you usually like post how much Bitcoin you want to buy or sell on the exchange at a certain price and how many like crypto using like limit orders. So when that starts to dry out, like a whale being like a person with a lot of crypto can manipulate the market and actually dump a lot of their crypto onto the market. And because the order book is so thin, there's not enough buy orders on placed to support either like the huge buy or the huge sell. So what happens is you have a cascade of orders going down, and sharp drops or sharp spikes up in the crypto market. And what we had was like huge sharp, huge drops when either whales were trying to buy low or trying to short the market. It didn't take much Bitcoin like selling on exchanges to actually cause those big drops.
That's definitely true. I would say a lot of that happened even more 4 years ago when there wasn't a lot of liquidity in Bitcoin or the entire crypto space. So a lot of these whales came out of nowhere and were able to significantly change the price at any project, even Bitcoin itself. But currently today, I would say a lot of that has been reduced because there's a lot of money in there in the market cap of Bitcoin, so it's a lot harder to do. But we can definitely see that it's nothing in comparison to like the foreign exchange market, where it's like $1 trillion versus like almost a trillion now, currently sitting at Bitcoin. Um, so yeah, it's definitely evolving since where it was before.
Yeah, and the order book is also something that I used when I was trading kind of intensely in the bull market, and you can actually see like buy and sell walls. If you were to graph it visually, it's like when sell walls are like on kind of the right side where there's like huge wall. It'll take a lot of buy orders to make the price go through above a certain price of a crypto asset, and also kind of a buy wall is the other way where there's like a lot of buy orders at a certain price, and it'll take a lot of money to actually push through to the downside. So kind of on-chain metrics order book is important as the other side, like non-graph related, non-chart related metrics that you should watch out
Yeah.
for.
Also, a lot of people use longs and shorts. They try to see I think they look at it from like an order book perspective as well for their longs and short and see which way the market is trying to go for Bitcoin. When there's a lot of stacks on longs, they try to think, oh, okay, so Bitcoin's going to go up maybe it's from today or to whatever. At the same time, there is a such thing of stop loss hunting, trying to
Yeah.
destroy your leverage position. That is very real out there. So be careful when you're leverage trading, or if you leave a position more than a day, someone or some software is going to come after your position.
Yeah. And there's not much like leveraging right now in the market because kind of a lot of capital has been wiped out. But during bull runs, their leverage trading is very popular. And there, if you ever go on leverage trading sites, there's actually a fee that you have to pay to borrow capital to leverage trade, and it's called the margin trading. And when those rates either go like really high to one side or really high to the other side for a prolonged period of time, that's also another indicator that should signal like the trend's going to reverse. So that's another thing, kind of margin trading related. I don't recommend going down that route if you're starting out.
Yeah, I think the best benefit of this learning experience really comes from dollar cost averaging, spot trading. There are other sites that do less leverage trading and you can't get liquidated. Um, there are such things like that out there, so definitely check it out. It's just like 3x, 2x, but at the same time, no matter how much the price drops, you cannot get liquidated. So um, that's for one.
Yeah. Yeah. So a lot of content. Definitely, like if you want to rewind and play back some of these parts, feel free to do so. But some advanced trading strategies, if you guys want to learn more, definitely kind of Google these indicators, add them to your charting tools. But definitely, this is kind of the part 3 of the trading series. If you guys wanted to go this advanced.
Yeah, so we don't have that much time left. We do want to close on a good note here. If you guys have any questions or any more input, definitely leave it in the comments so that through your let us know about your experience, what you've gone through. Maybe this might be your first time going through a bear market, or maybe a second time. It could be very helpful for others. And definitely during this time, more people are going to be in fear. The best thing to buy, only a dollar cost average, I would like to repeat again, is just Bitcoin and Ethereum. Right now, Ethereum is going to go through a lot of tests to make sure that the proof of stake is going to work. So definitely, right now might be just Bitcoin alone is the best time to buy. Everyone's always asking when's the best time to get in, and that's when it's full fear, capitulation. When nobody wants to touch cryptocurrency is the time that we should be touching it. So
yeah. Crypto has died like over 50 times in its like 10-year span. So we're here because we believe in the crypto space. We think that decentralized money, decentralized technology is going to be the future. And the way I see it is that it's going to be a slow bleed for actually the Federal Reserve and the kind of government money over time, as people see how the inflation of the world increases and impact their daily lives, the need for sound money, and also the need for some kind of currency in a store of value that isn't controlled by a centralized party, because we know people are prone to mistakes. We've seen it at Luna with Do Kwon. I'm kind of concerned about like Twitter with Elon Musk, but we're also seeing the same thing with like Jay Powell and the Federal Reserve playing out. And a lot of people have been saying this for years, that real inflation has been really high, like mid-teens, 20s, especially like if you look at it from like a cost of capital, not just like consumer prices standpoint. So the cost of capital has kind of been the leading indicator for now. We see like actual consumer-based inflation be at, which is crazy, 8%. And that's the US dollar, the reserve currency of the world, inflating at 8% a year. So it's crazy. I think it's going to cause like a cascade of failures for, well, not necessarily a recession. We'll see what happens, but we're going to see like hyperinflation for those currencies, for those countries and other currencies, like kind of pegged to the US dollar. It's going to be really interesting for the next few years. So have a long-term perspective. Don't see like, I don't know, a 50% drop as a reason to forget Bitcoin forever. I'm not doing this to pump. I seriously believe like decentralized money, decentralized technology is the trend for the next 10, 20 years.
Definitely. I want to add to that. I want to say that we're in an age where we're in 2022. We're living in the future, and yet our financial system is not living in the future, right? Some things that cryptocurrency market got right is that the financial system should be always 24 hours, 365 days a year. It should be always operational, and it should never go down ever, not even for banking holidays. And at the same time, this market should be open, and it should be the financial system should be pretty much like Netflix, where they can stream your income instead of having to pay you in every 2 weeks, or being able to understand how much money you will have, day-to-day basis, or by minute, by second. I think that's the future that we should be in, yet we're not there yet in our financial world. At the same time, it's very true that I think that we need some type of decentralized money, because when a dollar is like tied to a government or tied to a country, and one day if it goes bankrupt, that dollar can disappear tomorrow, right? That worth. So we need some type of decentralized type of money that everyone can kind of depend on. Not to say that we should go back to the gold system, because that's old news. We definitely need something like this, where it's like the digital dollar, a digital currency, and something that can adapt to being all three at once, in terms of like being also a digital asset, and that can really combat inflation that we have, that we're seeing around the world. So I really think that Bitcoin is probably the best digital real estate that we can buy today for millennials and for the future, and that it's like probably the only currency out there that's going to be able to combat the global inflation that we are seeing today.
Yeah, and we're sharing this with you because we just want to be part of this kind of movement in decentralized technology, decentralized finance, decentralized money. Definitely going into this space, when I heard about it, was just how easy and accessible the space was for the average person. So definitely get involved, get learning if you haven't already, and hodl, hodl like a scrub, like us. So definitely a long journey ahead of us, but yeah, get involved.
Yep. All right.
Sorry, no dog. He wants to get involved.
There he is, cheering on us.
Yeah. All right. Well, thank you guys for listening. Hopefully you'll find episodes like this and other episodes in the future helpful for you, and kind of an on-ramp for you to be involved in the crypto space.
Yeah, look forward to our next episode. We're definitely going to be talking about more about the Bitcoin projects. I think we've also heard about Bitcoin NFTs and Bitcoin DeFi that might happen or ever happen. That would be the most interesting things out there. And also just like maybe just to get into a little bit about like what people don't know yet is like the Lightning Network for Bitcoin and how it can actually be used as a currency. I know we talk about how it's like so expensive, it's so big, or there isn't that many Bitcoins out there that we can actually use it for currency. But it actually, there is technology being built on top of Bitcoin currently today where they can actually make it into divisible by a couple thousands. So that is very very possible, and we're looking forward to that. And we will definitely dive deeper and give you, I guess, like more of what Galen would like to say, the philosophical route of why Bitcoin needs to exist in our world. And so we'll discuss that in our future episodes.
Yep. Give us a follow, subscribe. See you guys in the future.